here at Inside ETFs. We're going to talk to a number of industry experts about their products and what's ahead for the rest of 2018. Hi, I'm Todd Rosenbluth, back here at Inside ETFs with John Ameriks of Vanguard. John, Vanguard's done some filings for actively managed ETFs that feel like some of the factor products that we know about that. Let's just talk about what Vanguard has filed.
Well, yeah, I mean, we've filed for a suite of actively managed ETF product. I can give you some high-level information, but we're in the quiet period, so have to be a little careful. But there's a multi-factor ETF, there is a minimum volatility ETF, and then there are 3 rules-based factor exposures, a quality, a momentum, a value, and a low liquidity.
So low liquidity is something that I think is, it's okay. Low liquidity is something I don't think advisors are probably as familiar with. Tell me about the concept of that.
Yeah, it's a really interesting concept. It's one that's not out there commonly now, although there's been quite a bit of academic literature that's written around it. The way we think about the low liquidity factor is kind of the way that investors have thought about small capitalization stocks for a long time. The reasons why they buy small caps, we think, are actually more related to the fact that there's low trading volume, they're less covered, there's a lot more activity. A lot of the stories that people tell about the market being less efficient, we think is part of why that low liquidity, that low turnover effect is actually there over time.
So what is the benefit from an active component versus some of the products that we have out there? What is the portfolio manager discretion? How does that play a role in the way that these products will work in theory?
Yeah, there are a couple of benefits we think to actively implementing these types of strategies. The operational ones are sort of front and center. If you've got a concept that you're trying to track, you're trying to get exposure to a factor in a portfolio, and that involves moving away from market capitalization weights in a pretty significant way, having the discretion to be able to trade, first of all, how you want when it comes time to trade, to be active around that, and having discretion about literally how you're going into the markets and the timing of that is important. We also think if you trade, you may not need to. Something like a minimum volatility product, if you look at the volatility profile of the fund, you look at what an optimized, newly structured minimum volatility result would get you, and if it doesn't really move the dial, you don't need to do that as an active product. You don't have to follow the rules just to follow the rules.
And I would think there's probably also a benefit from an advisor's mindset that there's an active component to this, that they understand a little bit more that this is different than a traditional passive product.
This has really been the thing that's been first and foremost in Vanguard's mind as we've talked about this space. We want to make sure that investors and their advisors understand what they're getting with these products. And in this space, you're getting an exposure that deviates pretty strongly from a broad-based market exposure. You're doing that to either outperform, or you're doing it to get some kind of exposure that you think is desirable for, say, diversification reasons. But it's very much an active decision. That part of it we think is also really useful, to manage an active idea as an active product.
Thanks, John. I appreciate you coming by our booth.
It was great to see you again, Todd.
Thank you.